Hello everyone, I am Cécile and I work at Agicap. Agicap is the software that allows you to drive your business through cash flow. As you know, cash is a matter of life and death for your business. So, to sleep soundly, it is better to have some visibility on the evolution of its cash flow in the coming months. It may seem complicated to make forecasts and set up a cash flow plan, but with a simple method, it is within everyone's reach. In this video, we will cover the steps to set up a cash flow plan, the method for making your forecasts, and the tips for making a cash flow plan as close as possible to reality. A cash flow plan is a table that forecasts your company's income and expenses. In this table, the manager of finance of the company lists month by month expenses such as expenses and investments and products like revenues and financing. It has to be done over several months for the current or future periods, forecasting certain cash flows, committed invoices for example, and making assumptions for uncertain flows. Subsequently, the cash flow plan will serve as a reference to compare the forecasts to the actual. Projecting yourself into the future starts with a known starting point. You need your current cash position. The safest is to start from your available cash flow from your annual balance sheet. But if you have rigorous monitoring in place, you can also start from your monthly cash balance from your monitoring table. In your table, you have rows, which are your incoming and outgoing items, and your columns, which are your upcoming months. The goal is to identify and break down your cash flow into categories and subcategories that are specific enough to allow you to run your business well without making it difficult to read the table either. The level of detail should be tailored to your business model and your need for visibility. It must also be adapted to your types of banking flows, which may be difficult to identify and drive between categories. You can divide your receipts and disbursements between variable and fixed. This can be used later to optimize your costs, for example. To give you an idea, here are the most common collection categories. Customer invoicing, which you can dispatch between several subcategories by payment method, by type of customer, or by VAT rates. Aids and grants, VAT credit reimbursement, if your VAT to be deducted is greater than that collected. Loans and other financing, bank loans, fundraising, personal contribution, capital increase, for example. Once you've done the inventory work for your revenue, you just need to do the same for your expenses. Supplier payments, salaries, social and employer charges, or costs related to your premises such as rent, electricity or water. Subscription like internet, software, phone, marketing and communication costs, service providers like accountants, lawyers, subcontractors, insurance, bank, for instance reimbursement fees, intervention commission, etc. Taxes, corporate taxes, property contributions, VAT if your collected VAT is higher than the deductible VAT. Without forgetting a miscellaneous category, goodwill, travel or expenses. Now that you have a structure of your table with rows well defined, you can move on to the forecast. The first step is to place in the right timeline the receipts and disbursements, including tax that you already know, current invoices, fixed costs, etc. From your invoicing software, you can find out which invoices are being settled on the customer side and which purchases are in progress on the supply side. It is really important to consider customer payment terms. You have to be realistic about your ability to cash in at the right time. Quite often, we invoice at the end of the month. The time needed to create the invoice, send it, for the customer to receive it, to record it, then to put it into payment, it takes time. If there is an excess, you will pay VAT the following month. In the event of a deficit, it is the state that will owe you the amount. Reimbursement, a little longer than the payment, counts on average 2 months. Basically, if you make a profit and sell more than you spend, you will always owe money to the state. On the contrary, if you are in the investment phase, you will receive a VAT credit. Most businesses have multiple outstanding loans. My advice is to properly list all your loans with interest and due dates. Sometimes you may have taken out a deferred loan. It is essential to take this into account when drawing up the cash flow plan. Likewise, if you're almost done repaying a loan, it is going to have a big impact on your future cash flow. Once you've listed all of your certain cash flows, it is time to plan a little further into the future. I'll share with you some best practices for making your cash flow forecasts. To project yourself on your future income and expenses, it is better to rely on the figures for previous years. If you start your business, base it on the assumptions of your business plan, which should be as documented as possible. In cash, receipts and disbursements are subject to significant variations and are rarely smoothed over 12 months. Your forecasts should be made month by month. Be especially careful about forecasting variable loads. It is quite common to underestimate upcoming expenses. Better to start with a conservative assumption to cover expenses you may not have anticipated. Start from a precautionary principle and consider that there will be additional delay on the customer side, but you will pay earlier than expected on the supplier side. You can duplicate your cash flow plan to create several scenarios. In addition to the realistic scenario, do a worst-case scenario, which allows you to determine your cash flow points and know how much time you have ahead of you before going into the red. You can also compare your different forecasts with each other. For example, if you want to buy bigger premises, what impact will this action have on your cash flow in the best and in the worst case? We covered everything you need to know about cash flow forecasts. All you have to do is get down to building your cash flow plan. I promise it will help you. If you like this video, you can test AgiCap or ask for a demonstration to our services, and subscribe to our channel for more videos. Thank you for watching this video and see you soon.